All right. Good morning, everybody. Good morning, all you magnificent melon heads, and happy Thursday, everybody. Today's August 22nd, 2024. The top story this morning is the trains are no longer running in Canada. Canada's two largest railroads have just locked out their workers amid an ongoing contract dispute with the labor unions working on Canadian railways. You've got Canadian National Railway and Canadian Pacific Kansas City have both shut down all operations, anticipating this lockout. Now, so far, no big major impact. No big stocks are moving on this news. We don't know how long this is going to last. Right now, it's not a problem, but it could be a problem. We weren't warned about this earlier this week that this was out there. About 1/3 of all of the Canadian railway traffic from these two railroads crosses the border with the U.S. So this is going to affect U.S. exports. This is going to affect U.S. imports from Canada. Things like car engines, things like fertilizer, things like chlorine for water treatment plants could end up with problems because of this railway strike. Or I'm sorry, it's a lockout. It's not a strike. Basically, the owners have locked out the employees who wouldn't agree to the numbers that they wanted. So we'll keep an eye on this story. We don't know how long this is going to go on, how big a deal this is going to be. We saw a lot of these labor disputes last year. I don't know if you guys remember, the airline pilots were threatening to go on strike. The UPS drivers were threatening to go on strike. The automakers were threatening to go on strike. All three of them won major high double-digit percentage raises from the owners of the companies. I mean, it was basically big victories across the board for labor in every one of these contract disputes. But that victory was short-lived because just several weeks after every one of those, almost every single airline and UPS and the automakers all started mass layoffs. So we'll see if this one goes that same route. Now, something else we got to talk about yesterday, the labor data. We got that big change to the Bureau of Labor Statistics data that we had warned about. There was estimates that the jobs numbers from March of 23 to March of 22 or 24 could be revised lower by as much as 1 million. The range being given in the press was 600,000 to 1 million. Well, the answer was pretty much right in the middle of that band. 818,000 jobs went away. About 300 and change of those jobs were from professional business services. We lost more than 100,000 in manufacturing. Big, major downward revision to the jobs numbers. And I would add that this is on top of all of the downward revisions that we've had to the monthly numbers so far in the last year. 11 out of the last 13 months of jobs numbers have been downwardly revised after the fact, plus this 818,000 downward revisions to the jobs numbers. So we got confirmation yesterday that the labor market, not nearly as strong as they've been telling us, something we've been saying for a long time on this channel. Now, there's one important caveat. I got this question from a lot of people in emails and DMs on Twitter yesterday asking, what does this mean for the unemployment rate? It means nothing for the unemployment rate. The unemployment rate is derived from the household survey of the non-farm payrolls report, or the jobs report that we get every month. The household survey that makes up half of the report, but the non-farm payrolls, the jobs added, that comes from the establishment survey. Two different surveys in the same report. And these revisions only affect the establishment survey. So there is no immediate change to the unemployment rate caused by these 818,000 jobs going away that we thought had magically appeared because unicorns and rainbows. I don't know why. So this won't cause the unemployment rate to rise, but it does suggest that the labor market is a lot weaker than we think, which means maybe the unemployment rate is going to rise faster than we anticipated. Either way, not good for the labor market. Now, we also got some labor data this morning. We got initial and continuing jobless claims. They both rose ever so slightly. No big changes to the jobless claims picture at the moment. But I do want to talk about what happened yesterday, because everybody on FinTwit was sitting here waiting at 10 a.m. was when the data was supposed to get released. Everyone was anticipating this revision of the jobs number. 10 o'clock comes around. We don't have it. Everybody's hitting refresh. Everybody's like, oh, do you see it yet? Have you had it yet? The emails are flying back and forth. What's going on? 10:05, 10:10, 10:15, still no data released. The data didn't get released until 10:39 a.m. The Bureau of Labor Statistics was 39 minutes late releasing this data. But you know what happened during those 39 minutes? Foreign banks were calling the Bureau of Labor Statistics and getting the information. Banks like Nomura, had early access, BNP Paribas had early access to this information. They called up the Bureau of Labor Statistics, and the people at the BLS gave them non-public information. And what do you think those banks did with that information? Gee, do you think any of them maybe went and traded with information that wasn't available to the public, either through incompetence or corruption? It doesn't matter. I cannot believe this is going on. The corruption, keep in mind, guys, this is just a few weeks after all of the freaking brokerages went down on Monday morning, August 5th, during a volatility spike when everybody was trying to sell, whoops, down for maintenance at Robinhood, at Charles Schwab, at Ameritrade, at all of the brokerage houses, E-Trade. Every single one of them went down. The market is so unbearably corrupt. These people are such freaking crooks. They don't even hide it anymore. And it's like every time these guys get caught in this unspeakable corruption, they just smile and hold up a pack of Mentos, and the whole world just giggles and says, oh, well, Wall Street's run by crooks, and we just go about our day and nothing ever changes. Absolutely disgusting, corrupt, incompetent behavior from the government and the banks yesterday. Everybody saw them do it. What the hell is going on at the SEC? Where is Gary Gensler? Do your freaking job. All right, Jack is now off of his soapbox. Let's talk about some earnings. Snowflake earnings came out yesterday afternoon after the close, and they were really good. Beat on the top and bottom line, big raise, fantastic numbers, and yet the stock is selling off hard this morning, almost 10%. Might have something to do with the fact that Snowflake is trading at 50 times free cash flow. And whoops, the whole point is to make money, and well, they don't make that much money. Probably why that AI company is selling off this morning. We also got some worrying car information this morning. First of all, CarMax is laying off 400 people. There's some more anecdata about that weak jobs market. And Advanced Auto Parts reported, first they reported that they were selling Worldpac Inc. to Carlyle Group for $1.5 billion. So the stock rallied a little bit on that information. And then a couple of minutes later, they reported earnings. Net income down 43% year over year, and down goes Frazier. The stock absolutely got clobbered on that news of a 43% net decline in net income. Urban Outfitters, they reported disappointing sales growth. Their comps were only up 2% year over year versus 3% expected. The company said they're probably going to have to add promotions and markdowns to gin up sales. So that stock is selling off this morning. BJ's Wholesale reported solid growth numbers. Decent earnings and revenue were both up, but the stock is selling off hard because the revenue numbers missed expectations. So we got a mixed bag in the earnings reports this week. Couple of bad ones there. More anecdotes about job layoffs, more weak retail numbers. Auto parts are weak. Apparel is weak. Snowflake, that was kind of interesting to see that one selling off. It's almost like investors are starting to wonder what they're actually buying when they bid up these AI stocks. And of course, just unspeakable corruption over at the BLS. So much going on, so little time. Why don't we shrink my big melon of a head and let's see what's going on in the market this morning. Guys, don't forget that like button for the algorithm if you please. And if you're new here, hit that subscribe button and have your coffee with the melon heads every morning as we go through markets. And the S&P 500 is up again this morning, 12 points or 0.22% higher. Nothing stops this train, not even a Canadian railroad lockout. The S&P is up 48 points or 0.12% higher as well. And the NASDAQ is up 74 points, 0.37% higher. So stocks up across the board. The U.S. dollar is a little bit higher this morning, 101.27. That's up by 23 basis points after very briefly touching 101 this morning. So the weaker dollar here taking a break this morning, a little bit of a bounce. That'll put some downward pressure on stocks. Looking over at the bond market, we got yields are largely higher this morning. We had Fed Governor Schmidt was out making some comments saying Schmidt is one of the big hawks on the Fed. And he was saying we're probably going to cut or they're open to cuts, but he wants to see more data. So it was a little bit of wishy-washy from one of the more established hawks, but all of the conversation was on the cut. No mention of higher for longer. I think the market interpreted this as hawkish. I read the article. It looked like it was a little dovish. So yields moved a little bit higher when Schmidt made those comments. But right now, the 30-year Treasury is at 4.097. That's down 4.5 points. The 10-year is at 3.826. That's up 5 points. I'm sorry. Did I say the 30-year was down? The 30-year is up. They're both up. And the 10-year is up as well. The 2-year, 3.966, up 4.5 points. And the 1 month is at 5.39, pretty much unchanged from yesterday. The 10-2 inversion is now just 14 points. So we got a little bit of a closure in that gap yesterday. It was 17 points yesterday. So now we're down to 14. So the yield curve's still inverted, but that gap is getting a little smaller. Looking over at the commodities, it looks like gold is taking a breather this morning, back below the 2,500 mark for spot gold prices at 2,498. That's down by $13.50 this morning, about 0.5% lower. September, let's just talk about spot silver, 29.62. That's up a couple of pennies here, 0.09% higher. So essentially unchanged for silver. We got copper lower by 0.5%. Platinum lower by 1%. Palladium lower by about 2/3%. And October WTI crude oil futures are at 72.25. That's up 32 cents or 0.5%. We had a little bit of a sell-off in oil yesterday. Now that back in the low 70s here. Oil's been kind of interesting, guys. The inventories are getting lower. We're getting very thin. The stockpiles are shrinking. But at the same time, this worries of global recession are really starting to cause demand disruptions. And the market is just totally desensitized to violence in the Middle East. So oil prices are not moving on Middle East turmoil, and it looks like it's come down to a matter of, will the economy, the global economy, slow or won't it? Right now, the market is saying, yes, it's going to slow. Oil remains in the lower end of this $70 to $80 band it's been at for the last few months. Looking at Bitcoin this morning, $60,800 on Coinbase. That's down about $360 from yesterday. Still below that 50-day moving average, still acting as resistance here. Just cannot break above that 50. 1, 2, 3, 4, 5, 6. Now 7 attempts to break back above that 50-day moving average. All have failed in the last 2 weeks. Keeping an eye on that one. Now let's talk about Canada here. Canadian freight and railroad shut down, dealing a potential blow to North America's economy. I want to put an emphasis here on potential blow to the economy, guys. There's not going to be any immediate impact here. I don't want to be accused of fudding and dooming or anything like that. Just letting you know, this one is out there. Canada's 2 major freight railroads have shut their operations, according to management of the 2 companies, locking out 9,000 members of the Teamsters Union who operate the trains and dealing a potential blow to both the Canadian and U.S. economies. Nearly 1/3 of the freight handled by the 2 railroads, Canadian National and Canadian Pacific Kansas City Southern, crosses the U.S.-Canada border, and the shutdown could disrupt operations in a number of U.S. industries, including agriculture, autos, home building, and energy, depending on how long the shutdown lasts. CPKC is acting to protect Canada's supply chains and all stakeholders from further uncertainty and the more widespread disruption that would be created should this dispute drag out further, resulting in a potential work stoppage occurring during the fall peak shipping period, the company said on Thursday in a statement shortly after the lockout. Delaying resolution to this labor dispute will only make things worse. The shutdown would drive home how closely linked the 2 nations' economies are, with many industries depending on the free movement of goods across the border for their efficient operations. For example, some U.S. auto plants could temporarily shut down if they're unable to get engines, transmissions, or stampings done at Canadian plants. U.S. farmers might find shortages of fertilizer, and U.S. water treatment plants near the Canadian border could run out of chlorine that they use to purify water. So again, no immediate impact to any of these industries here, but depending on the duration, this one could cause disruptions. Just looking at these Canadian railroad stocks, they're barely budging here. Canadian National Railway down 0.2% this morning. Not really much movement here. And Canadian Pacific Kansas City Limited, they're down 3 cents, 0.04%. So this was largely priced in. No big move in the stocks, but it is a story worth keeping an eye on. Now, for the one that's going to make you grind your molars this morning, this one, I tell you, man, this really pissed me off when I heard about this one, and I wish I could say I was surprised, but I wasn't. Banks obtained crucial jobs data while the report was delayed. Amid a delay, at least 3 banks just called and got the figures, and the BLS gave it to them. That is unbelievable. Wall Street was waiting on data to confirm rate cut bets. At least 3 banks managed to obtain key payroll numbers Wednesday, while the rest of Wall Street, and I should say the public, not just Wall Street, was kept waiting for a half hour by a government delay that whipsawed markets and sowed confusion on trading desks. After the Bureau of Labor Statistics failed to post its revisions to the monthly payroll figures at 10 a.m. New York time, Mizuho Financial Group, BNP Paribas both called the department and got the number directly. So did Nomura Holdings economic research team, according to a person familiar with the situation. So while the public and Wall Street was waiting for the data, we had 3 foreign institutions called up the BLS, and the government gave it to them. Non-public information that I'm sure they took and went and traded on. They got it first before anybody else. Oh, well, sorry. We tried. We're going to investigate ourselves and find no wrongdoing. Anger quickly mounted as word spread across Wall Street that the BLS had begun giving out the numbers over the phone. A scramble ensued with other firms and media outlets, including Bloomberg News, trying to obtain these figures. Guys, this was nuts yesterday. Everybody was sitting here wondering what was going on. Everyone was afraid to refill their coffee cup or get up and go pee because they didn't want to miss the numbers. For 39 minutes, the BLS sat there doing what? I don't know. Oh, that's right. They were talking to foreign banks before they got around to hitting the send button that would make that information available to the public. When the data was finally released around 10:30 a.m., it showed payrolls will likely be revised down by 818,000 for the 12 months through March, the steepest markdown to the jobs numbers since 2009. Stocks initially jumped and bonds gained because the report lent support to speculation that the Federal Reserve will start cutting interest rates next month. I don't wonder that people are upset, said Nancy Tangler, the chief executive officer of Laffer Tangler Investments. The whole thing reeks of incompetence. I might add corruption as well, not just incompetence. The delay in subsequent one-by-one disclosure is the latest in a series of embarrassing mishaps to Royal Labor Department data releases, which have been crucial to traders trying to gauge the path of inflation and the economy. In May, the BLS inadvertently published consumer price index data to its website about 30 minutes ahead of its official release. A month before that, it was reported that an economist from the Bureau of Labor Statistics had answered numerous inquiries from major Wall Street firms like JP Morgan and BlackRock on details of data related to the inflation gauge, raising questions about the department's practices. You remember the super users scandal where the banks were able to call up the BLS and get clarity on inflation numbers and figures that, again, information that wasn't available to the public. And then, of course, they went and traded on that. What the hell is going on at the BLS, guys? And again, we should not just accept that, oh, yeah, they're just corrupt. We all know they're corrupt. It's just another Tuesday and go about your business. It's got to be harder than that, all right? I don't have the solution here. The only solution is, I don't know, maybe complain about this enough on my YouTube channel that enough people hear about it and they complain, and then maybe somebody in the financial regulatory groups can actually go and do something to these people who are doing this. Let's start with the SEC. Going and investigating those 3 banks and what trades did they make before that information was made public. Let's start with that, because trading on non-public information is against the law. After all, it's called insider trading. And by the way, that guy at the BLS who gave out the information that wasn't public, let's look at his trades too. Let's look at what he did. Let's look at, does he have any favorable relationships with any of the banks that got that information? And you know what? Maybe we just fire the guy. I don't like to see people losing their jobs, but you know what? What he did was seriously messed up. It's not supposed to work this way. Jack, get off your soapbox. Speaking of labor data, and a much more calm note here, initial jobless claims in the U.S. increased to 232,000 for the week ending August 17th. That's up from 228,000 in the previous week. So this is your weekly initial jobless claims, a little bit of a tick higher, but still well down from the highs we saw a few weeks ago. So I'd say overall, the trend is still up on initial claims, but not at the moment is it very alarming. And looking at continuing claims, we had continuing claims in the U.S. increased to 1,863,000 for the week ending August 10th. Actually, this looks like old data. Let me refresh this. It's a typo. For the week ending August 17th, it should have said that's up from 1,859,000 in the previous week. So again, a slight increase in continuing claims as well, although off of the highs recently. So the labor data continues to deteriorate, albeit at a slower pace. Now let's talk about some earnings reports. Snowflake stock is tumbling after earnings beat. What's worrying Wall Street? Snowflake stock was tumbling in pre-market trading Thursday despite a positive earnings report. Investors likely needed a bigger earnings beat amid high costs to sustain its rich valuation. This thing trades at over 50 times free cash flow. That is an obscenely high valuation for a company that makes very little money. The cloud data warehouse software company reported second quarter earnings per share of 18 cents on Wednesday, above Wall Street estimates of 16 cents. Revenue came in at $868.8 million, beating expectations for $851.7. Yet the stock tumbled 9.4% trading in pre-market on Thursday. While the overall report appeared positive, higher costs squeezing its operating margins could be to blame for the stock's move. William Blair analyst Jason Adder referred to the guidance as mixed in a note on Thursday. Product revenue for the third quarter and full year were above expectations. However, the management only reiterated operating margin guidance of 3%, citing higher commissions tied to sales incentives, higher R&D associated with new products, and incremental hiring in the second half. So Snowflake stock getting clobbered this morning, down 9.2%, trading at $122.60. That's down $12 and change here. Pretty bad day for Snowflake, despite some pretty good earnings. But again, that valuation just way too high here. Now let's talk about CarMax here. This one is in Richmond BizSense this morning. CarMax lays off more than 400 employees in recent weeks. So the anecdote about layoffs continues here. Locally based used car giant CarMax has shed hundreds of employees nationwide in recent weeks in 2 rounds of layoffs. The Fortune 500 firm, headquartered in Goochland, West Creek area. I hope I'm saying that right. No offense to the Goochlanders if I misspelled your name or mispronounced your town there. They confirmed this week that the first round of cuts occurred last month when approximately 400 drivers in its logistics division were let go. The second smaller round occurred this week, affecting 15 corporate positions. I can confirm that CarMax made the difficult decision to reduce our workforce across 2 business areas recently. We do not anticipate any further broad reductions in our workforce, the company said in a statement. It said the 400 eliminated logistics drivers were located in various locales across the country. Those positions were eliminated following a review of its logistics network. Look, guys, one of the biggest negative categories we've seen in the inflation prints recently in CPI has been used cars. Used car prices were down more than 10% year over year in the latest CPI reading. So it's obvious we've got less used cars are out there selling. The prices they're selling for are lower. So a company like CarMax is not going to be doing as well. Fewer cars moving means we need fewer drivers moving those cars around. And so they have laid off 400, mostly drivers. More anecdata showing weakness in the labor market. And we got more bad news from the auto industry. This one in Market Watch this morning. Advanced auto stock sheds gains made on asset sale after profit lags. The stock had popped pre-market on news of a $1.5 billion sale of Worldpac before turning lower. Advanced Autopot stock was volatile early Thursday, jumping on news of a sale of its Worldpac Inc. wholesale business for $1.5 billion in cash before turning down 8% after the company posted fiscal second quarter profit that lagged estimates. The company posted net income of $44.9 million or 75 cents a share for the quarter. That's down from $78.6 million in the year earlier period. Guys, that is a 43% decline in net income for Advanced Auto Parts. Again, the auto industry really struggling here. Sales came in at $2.683 billion. That's down slightly from $2.686 billion a year ago. The same-store sales rose 0.4%, not even keeping up with inflation. FactSet was expecting a 0.5% decline. So the same-store sales, those comps were a little better than expected. Not enough to save the stock, though. Look at this one, down 22.3% ahead of the opening bell. That big decline in net income is killing them here. Stock trading at $48.02, down $13.92. More disappointing retail number here. Urban Outfitters shares sink on disappointing sales growth. Again, guys, that consumer, another story that's really making me doubt those retail numbers that we got last week. But let's just get into the story here. Urban Outfitters Inc. shares slid after the owner of the Anthropologie and Free People brands posted quarterly sales growth that came in below Wall Street expectations. Shares fell as much as 12% in pre-market trading in New York after the company reported on Wednesday that comparable sales in its retail segment rose 2%, which is below the average estimate of 2.94%. Comparable sales at its core Urban Outfitters brand also came in below expectations. Executives said on a call with analysts Wednesday that the company may have to add promotions and markdowns given the sales slowdown, which they expect to reduce gross margin. So there you go again, guys. The solution to higher prices is higher prices. We've got disappointing sales at Urban Outfitters. The company's saying they're going to be forced to lower their prices. So another data point saying we've got some seriously lower CPI prints on the horizon here. Urban Outfitters stock getting clobbered as well, down 14.15%, trading at $35.61. That's down $5.87. And another retail number here. This one actually wasn't so bad. The numbers were pretty good, solid growth here, but that growth was less than the market was expecting, and so the stock not reacting so well. BJ's stock falls as revenue rises but misses Wall Street estimates. BJ's Wholesale Club stock dropped 7% in pre-market trading Thursday after the company reported second quarter revenue that fell short of analyst predictions, though profit beat expectations. Second quarter net income rose 10.4% to $144.9 million. Really good net income here, 10.4% growth. Adjusted profit totaled $1.09 a share, well ahead of consensus estimates of $1.01 a share. Revenue increased 4.8%. So good numbers here, good growth, but BJ summed up the results as strong due to robust membership, accelerating traffic, and unit growth and fast-tracking digital business. But I think it was this revenue slightly missing expectations here. Even though the growth was 4.8%, that $5.09 billion in revenue fell short of the $5.15 the market was hoping for. And so BJ stock down 5.3% this morning. Looks like they had some pretty impressive numbers baked into the cake there, and then the market was disappointed. A couple more I want to talk about, guys. We talked about that oil tanker yesterday that got hit in the Red Sea. Well, that tanker has been abandoned. It was left adrift and on fire in the Red Sea. A Greek-flagged oil tanker was left abandoned, adrift, and ablaze in the Red Sea following strikes off the Yemeni coast. The UK Maritime Trade Operations Agency on Wednesday reported that the fire had erupted aboard a tanker which lost engine power and was no longer under command. It came after a gunfire attack from two small boats roughly 77 nautical miles west of the Yemeni port of Hodeidah. Hodeidah? Did I say that right? I don't know. Which is under the control of the Houthi militant group. The UK MTO did not name the vessel or the perpetrators of the incidents. Gee, you think it might have been the Houthis? I'm just going to go out on a limb here and say the Houthis did it. While approaching the area, some big military acronym I can't pronounce ship destroyed an unmanned surface vessel that posed an imminent threat to the ship and the crew. All aboard the MV Soyunion were subsequently rescued and are being transported to Djibouti, the nearest safe port of call. Plans are in place to move the vessel to a safer destination where a full assessment can be undertaken. So again, guys, that Red Sea situation, there's an oil tanker drifting and on fire in the middle of the Red Sea, and that's an ecological disaster just waiting to happen. Keep up the good work over there in the Red Sea. Things are going really great. And last one I want to talk about this morning, Chinese imports of chip gear hit a record $26 billion this year. So much for those export controls trying to prevent China from getting their hands on advanced artificial intelligence equipment. How's that going? Not so well, apparently. Chinese imports of equipment to make semiconductors hit a record for the first 7 months of the year as the Asian nations' companies continued to ramp up their purchases in case the U.S. and its allies further block them from buying. Chinese firms imported almost $26 billion worth of chip-making machinery, according to fresh trade data released by China's General Administration of Customs this week. That surpassed the previous high mark in 2021 and comes as American, Japanese, and Dutch officials work on increasing restrictions on Chinese companies. So looks like their year-to-date purchases, almost $26 billion. That's up from 18 a year ago. You can see the Chinese are really buying up a lot of this equipment. Now, Dutch company ASML sales to China surged 21% in the second quarter to hit almost half of its total revenue. You think that might have something to do with why the U.S. and the Dutch are still working on these export controls? Because the Dutch are making a lot of money selling this stuff? With sales consisting of unrestricted older systems as Beijing pushes to make more mature types of semiconductors, ASML is the sole supplier of the most advanced lithography equipment required to make cutting-edge chips. China's Semiconductor Manufacturing International Corp relied on ASML's older generation of lithography machines to achieve a technological breakthrough last year, according to Bloomberg News. So work on slowing China's AI acceleration, AI development appears to be slightly less than effective. A lot of semiconductor manufacturing equipment is being shipped into China right now. And I just want to say thank you so much once again to Mr. Ziebel Fritz. Thank you, Z, for that Nobody Special Finance membership. I don't know who it went to, but if you received it, guys, be sure and say thank you for Ziebel Fritz or to Ziebel Fritz. Appreciate the support of the channel, Z. And thank you so much to Hunt and Cover. Says, Jack, thanks for honoring your mom and dad. Well, you know what? Mom and dad are awesome. And, well, thanks, Mom and Dad. Thanks, Hunt and Cover, for supporting the channel. And by the way, should I say? No, I'm going to wait until tomorrow. I'm not going to say it. I'll say it tomorrow. You'll just have to wait. But Mom, Dad, love you guys. Thank you guys so much for everything. And thank you, Hunt and Cover, once again. Richard Bell, thank you, sir. He says, own the house, but not the land it sits on. Taxes, referring to property taxes. Well, yeah, that's kind of how property taxes work. We like to think we own our homes. And you know what? Even if we are lucky enough to own our homes outright without any mortgage, you still got to make those property tax payments. So realistically, you're still just renting your house from the government. If you think I'm kidding, see what happens when you don't pay those property taxes. But kids, don't try this at home. I don't recommend it. The government will come and take your house. So do you really own it? Do you? Thank you very much, Richard Bell. I appreciate the super chat, sir. And thank you to Nashville Pasta Man for being a Melonhead member for 6 months. Random things floating around on fire. My life. Yeah, dumpster fire in a canoe up a creek without a paddle. Sure, that sounds about right. In Nashville, I think we're all going through something like that these days, brother. So don't take it personally. Thank you, sir, for all your support of the channel, for everything, and for the laugh this morning. And thank you, everybody, for having your coffee with the Melonheads once again this morning. I appreciate all the super chats and support of the channel, as well as my magnanimous Melonhead members on Patreon and YouTube. Thank you guys so much for supporting the channel. Links down below, should you feel so inclined. And by the way, Hunt and Cover, hi, Mom, hi, Dad. Love you guys. Till next time, everybody, live small and dream big.